And I think it's fair to say, to some degree, yes, we are seeing a major market correction at the very least. You're seeing a 24, 25% drop. I'll tell you what, we're not that far. We're a stone's throw away from this going from a correction, right? Which I know this doesn't feel like a correction. It feels like an absolute crash. It's not quite there. Crash, right? The COVID crash, actually, James, the producer of this live stream, came into my office this morning. We were talking about, the COVID sell-off. COVID was a 35% down move in a couple weeks. I mean, this is pretty angular, but actually COVID was even more angular. I mean, let's just go refresh our memory here. The COVID 2020 move. I mean, just think about this. Imagine this is the market you're living in, and all of a sudden you get this, right? That was a monster. For those of you who traded during that time, you invested during that time, you may be getting flashbacks. I know I am. It feels similar. But actually, having COVID's sell-off under my belt, I guess made me in some ways not prepared. Like, you never know when these things are going to occur. I have a whole bunch of keyboard warriors, hindsight warriors in my comment section. I knew this was going to happen. I told you so. I mean, nobody knows exactly when a crash is going to occur, right? 2019, I was bullish as anything. And then sure enough, COVID happens, wipes out years of gains. Check this out. COVID, when it went down to its lows, on the March low of 2020, we had officially wiped out gains going back all the way, you ready? To 2018, right? Wiped out years worth of gains. We're doing something similar here, right? We are doing something similar here. We are in the process of wiping out multiple years worth of gains, right? Going back right now to 2024. But if we see, let's say we get like this move, let's say you get just a capitulation move, you're talking about back to 2023 lows. But then you really wind back, let's just say from current levels, right? You're still talking about a move back to the 2021 highs. How fast it all can shift, right? We can go from this unbeatable stocks go up every day mentality to suddenly stocks can't catch a bid. Nothing is getting bought, right? So what do? Well, if history is a learning lesson, what people will say every single time, and it has 100% in the long term been proven to be the wrong way of thinking. You ready? I'm not telling you to go buy stocks. Be very careful out there. This is a violent market, and a lot of people are going to lose a lot of money, and people are going to leverage, and they're going to mess it up, and they always do. People lose a lot of money with leverage, making big bets, buying options. Margin calls are everywhere. But here is my opinion. This is the 100% win rate strategy over the super long term. It's not flashy. It's not going to make you rich quick. When you have these kinds of market capitulation sell-offs, buying quality stuff and holding for the long term, like if you bought SPY, you had a 100% win rate over the long term. Now, if you buy individual stocks, they can go to zero. So you have to be careful, right? My opinion, my approach to this is I'm buying a basket worth of high quality companies, knowing that some of them could really struggle. Others might really rebound. But over the long term, you have to, in my opinion, give the benefit of the doubt. Most people, what they're going to say is, no, Nick, you don't get it. This time it's different. Every time it's different. Every single time. The carry trade unwind. This is going to wreck us for years to come. Right? That was one of the theories. I don't really remember what happened in April, but there was a sell-off there. In 2023, the Fed's going to have to do another round of rate hikes. We are not going to see rate cuts. Then boom, we got rate cuts. Go back to 2022. Inflation is going to kill us. Inflation's, going to send us off a cliff. And while this was a painful, ugly period, in fact, this was way more painful for me than 2020. Because 2020 was quick. It was a V, right? Everybody loves a good V-shaped recovery because it's quick and painless in the end. You're looking and you're like, see, that wasn't so bad. The 2022 sell-off was U-shaped. Well, really, it was like multiple U's and a long-term U shape, okay? What I mean by that is that we had major selling followed by rebounds, more selling, more selling, more selling, and then we bottomed out and we eventually rode back up. But my point is, could there be more room? The question is, are we more seeing a 2020 type sell-off or a 2022 type sell-off? 22 in my view was way more painful because tech stocks, many small tech stocks were down 70+%, right? We launched the EdgeFinder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the EdgeFinder is producing now. The EdgeFinder has helped traders go from beginner to pro in terms of the fundamentals and has helped many traders go from unprofitable to finding the missing pieces in the name EdgeFinder. So if you're not already using the EdgeFinder, let me tell you about the biggest discount that we offer all year long starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the EdgeFinder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the EdgeFinder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the EdgeFinder at the super discounted prices. Thanks for watching. And now back to the show. So this is why trading and investing is hard, right? There's nothing easy, right? Some people are like, oh, just buy good companies and hold them and you'll do great. Well, tell that to somebody who bought stocks over here and is now down 20+% on their portfolio. Or tell that to somebody who bought stocks in 2021, has been holding diligently all this time and is back to break even after 1,231 days, right? Nothing is easy. Nothing in trading and investing is easy. There's no free money. Every dollar you make in the market is going to be tooth and nail. That's the reality. So what do you do in this situation? Well, I'll tell you what I'm doing. You do what you want to do. This is not financial advice. I'm buying some stocks that I like. I'm going to go shopping today, a couple stocks on my list. And the further they go down, the happier I am because I have cash in the portfolio that I'm ready to start, or not ready to start. Let me take that back and be very transparent. I have been buying stocks too early. So I'm by no means catching the bottom on this move. But the further these things go lower, as a long-term focus, I have to buy some shares in companies that I like and believe in for the long term. So that's what I'm personally going to be doing. But please understand, this is, I've seen this story so many times in my trading career. Everybody's saying, oh, this time it's different. Markets will never recover. Trump's going to ruin the world. Or, this same story happened in 2018. I've seen this movie once before. Trump had a big trade war with China, sending us off a cliff. It's all going to HE double hockey sticks. And this is bipartisan. I felt the same way when people were saying that about Biden. Oh, Biden inflation's going to ruin us all. And then the market finds a way to recover. Innovation, resiliency, optimism wins in the end. Although it feels hard to do that when the market is tanking. But this is why trading and investing is hard. Ask yourself, does it feel right now to buy stocks when they're selling off a cliff? Your gut and your brain and your heart is like, ooh, I don't know. That's kind of scary, right? Again, they could go lower. We could see 10, 20, 15, whatever percent lower from here. I am not saying we're at the bottom. Please understand, this is not a timing discussion that I'm having. This is just a environment type scenario. People get the most bearish at the bottoms. That's what usually happens. Speaking of getting most bearish, can we talk about the put to call? Put to call ratio. Take a look. Our tool here is signaling some fascinating extremes. People are ridiculously bearish. I have not seen bearishness since focusing on the put to call ratio in my career. I've never seen it this bearish. The AAII Investor Sentiment Survey, I have never seen it this bearish. Never. So does that mean that this market is, does it mean that this market has to bounce back tomorrow or today? No. But historically, this is a signal. Again, don't take my word for it. I'm not here spitting, my opinions and begging the market to go up, because I actually would like it to go lower so I can buy it cheaper. But let me just express this. Throughout history, this historically, when you get it this bearish, the AAI, you go do your studies. There's people smarter than me that have done research on this. This historically has been a good time to buy stocks. I'm not telling you that you should. There's a lot of risk out there. We could see much lower prices. You could buy them today and they go down 20%. I'm not saying this is the bottom, but on a longer term basis, this environment, long term, has been a very good time to buy stocks. So we also talked about, can you check the COT data? Sure. We talked about this on the video yesterday. I got a lot of interesting comments. Of course, my video got crazy views on Sunday because people were, freaking out. I pointed out that surprisingly and shockingly, there was some net buying that occurred on the Commitment of Traders report. Now, people got really upset because there's a lot of bears out there, and I'm not trying to call out or upset people who are bearish, because again, there's a bear community right now. The bears have come out of the woods, if you will. The bulls are running for the hills. Look, let's be completely transparent about this. The Commitment of Traders data is Tuesday's data reported on Friday. So there is some lag to this. And in a market like this, where every single day is so important, this is a lagging report. So let's be very, very transparent. But still, you can see where the heads of institutional money was at as of Tuesday. They were in there buying the dip. So wouldn't it be shocking if between now and Friday, we actually see more institutional accumulation at these levels? Again, I don't necessarily have I don't have a short-term bullish perspective on the NASDAQ. Please understand. Short-term bearish, short-term price action looks horrendous. Long-term, I got to buy stocks. So that's what I will be doing. I'm not encouraging you to do that. In fact, if you can't handle the heat of this market, nobody can blame you. I said something on a couple people responded to my Sunday video. In the video, I said, you're not crazy. The market's crazy. And it's very true. This is an insane market. If you're stressed out and it's freaking you out and you're a human being, that is normal behavior to be this is a crazy, crazy environment. I've never seen this before, right? Many people are experiencing this type of move for the first time. Veteran traders who have been around the block have seen these market environments before, and that's a huge up, right? It's a huge advantage. If you've seen this before, you know generally how to behave in this. You can't freak out. You can't go all in. You can't get short, in my opinion. You can do what you want, but a lot of people are going to try and short this market when it's already tanked, right? Everybody already knows there's bad news, there's scariness out there. If you're shorting it here, again, you're betting, let me express something to the short sellers. If you are bearish right now, if you are saying I'm shorting right now, what you are saying is we need something worse to happen, right? You need something bigger and worse to happen. Let me tell you what's already expected. The market already expects negative retaliation from other countries. So if you're saying, no, the other countries, they're gonna come back and buy. Nope, the market already said that. The market already knows that. The market is really smart. Smart people have a ton of money. They're already shorting this market. They already knew that was coming, right? So that's why the market's where it's at. You need something bigger. Well, Ivan, last week when you came on and joined the stream, you came in and said that the NASDAQ might potentially be bottoming, and it actually did lead to a short-term rally in the NASDAQ. So what I'm asking for you, Ivan, is say it again, man. Please say it one more time. Is the NASDAQ going to bottom right here?
Yes, it is going to bottom today.
Woo! There you go, guys. Bottom's in. What's going on, Ivan? What's the latest in this crazy market we're living in?
I was right for about 5% or so on NASDAQ.
Pretty good bounce.
Okay, is anyone else having trouble? I'm trying to show NASDAQ, but this one doesn't want to load, so I need to go and...
I saw some other people said TradingView. There literally might just be so many people hitting the servers right now for TradingView. That actually might be it.
Yeah. Sorry. So about 5% I was right, about 10,000 points. So I think that's pretty good enough. So 5% is good enough for me. And yes, I wasn't wrong. No, yes, I wasn't right. Yes, I wasn't wrong. It's just that I was the bottom, at least for the time being, and I was right about that at least. But honestly, the journalists in Norway are now trying to be economists. It's pretty funny, interesting.
Oh yeah.
Like how the stock market fell in Hong Kong, down 13% or so overnight. So yeah, they're all now reporting about the stock crash.
Mm.
But I don't know. Is this the stock crash? It's just, and even you, Nick, you're looking to buy things. You know, it's just another day. It's just another day in the office, right?
Well, and that's a question I had for you, Ivan. Is like in this environment,
Yeah.
How do you approach it? Like for me, on a short-term perspective, there's no trades on the Nasdaq long. There's no SPX longs, none of that. But on a long-term basis, I just buy a little bit of stock in something that I like every single day and add it to the portfolio for the long term. And you know, I'm not buying penny stocks. I'm not buying high-risk stuff. I'm buying without leverage or margin, things that I like for the long term. So that's how personally I approach these times, these panic sell-offs. And that doesn't mean they can't get worse.
I think that, you know, I'm just gonna call it up, Nick. You know me, right? I think that yen pairs are gonna go higher by the end of the week.
Okay, that's a bold statement, because that is definitely more leaning risk on, right?
So the reason is, and this goes back to what I'm currently experiencing, is this is what I call risk event. So a risk event is when everyone panics and everything sells off, and then we're like, but we are okay, and then we go back up again because there is no more escalation. We need more tariffs. We need more, I don't know, troubles for this to continue falling. On the flip side of everything, Powell says he's not going to cut in May.
Interesting. Yeah, I mean, you have the dynamic there. There's no Fed put to save the day, and apparently there is no Trump put either. Trump was interviewed over the weekend. Some of you guys might have seen that in the audience. Trump was asked, you know, what are your thoughts on this sell-off? And essentially, he said sometimes you have to take your medicine, which obviously the market does not like to hear, because if this is medicine, right? If he thinks the situation is sick, and you know, sometimes medicine takes time to you know, improve your situation. So we'll see, but it's certainly a violent morning here for many traders, investors. The Monday gap down here. But that being said, we were just down 5%. We just ripped 4% quietly on the Nasdaq. So Ivan, you might be a magical creature that just makes the market go up whenever you show up on camera. So if you could just stay there for like 6 months.
Just have them in the background. You just hear me laugh sometimes here and there. Now, as a serious people, I can see your comments. And what I've said, I think I said in the weekly planning meeting yesterday. I think I said in my own YouTube video, and I think I said it in the VIP webinar meeting an hour ago. We are risk off. So yen pairs falling, dollar pairs falling, until we are technically bullish again. And then it can be turned risk off again if we have more tariffs. My only point with don't expect this thing to fall out of nowhere or to go higher, because there is too much risk right now, is that I said that to kind of get you engaged, get you like to be a bit more, you know, oh, what's actually my stance here? Because that sounds ridiculous. Everything they've been taught is yen is rising in a risk-off environment. Yes, it is. And that's where you're supposed to get, you know, that's your core. But in kind of how this is going is if we were through 2020, we had horrible data. Everything was closed down. Everything was horrible. But how did we market still go higher in a risk-off environment, environment where We were all locked up. We were all like, we can't touch each other. And markets went higher. Yen pairs went higher. What are you talking about? What I'm talking about is follow your trade plan. If that is higher on yen pairs, great. Manage your risk. Great. It is absolutely astronomical at the moment. Great. VIX is, I don't know what it was, 50 or something. Great. But it all comes down to, what have you done before? Have you tried this environment before? And the people I've been talking to today have never seen this environment before. Of course, it's not supposed to be gambling left.
The only people, Ivan, that have seen this level of volatility in recent history, there's two instances. One was very short-lived in August, right? Very short-lived. You can see it didn't even. There was no. The VIX was up briefly, came right back down. Before that, 2020 was the last time we had a VIX that did this kind of move, where you had just outright pandemonium on markets. Again, like I said, this was a very short-lived period where markets freaked out. Yen got really strong for a second there and then kind of ripped back the other way. But you made a point there I want to just bring to the attention again to the audience members, because so many people, everybody I know, right, personally, is like, oh, this is getting so ugly, Nick. It's gonna crater off a cliff from here, right? And that right there is what separates, oftentimes, as you've just properly discussed, like profitable traders who get it versus traders who are just chasing the hype. And what I mean by that is that you need something, as you said, something more to get this thing to go down way faster, way harder, way bigger, right? In 2008, when the markets crashed big time, it was because you had a structural problem, and then just at one after the next, bankruptcies were coming out. New catalysts were causing the market to go lower and lower and lower. The overall economy is not we're not in a recession right now, right? Please understand, for everybody listening, this is a distinction that you need to understand. If you're new to fundamentals, we are not in a recession right now. The risks of a recession have risen. There's two different statements there. For you for the bears out there, for you, look at this NASDAQ ripped. Ivan, what are you doing to this? Are you just like punching the buy button so hard off camera and making this thing go up? I don't know what's wrong with you. Anyways, you made the point. It's really important. You need escalation from here to get this market to keep going down. It doesn't just go down because it goes down, right? There needs to be a further reason to make this market go down. And we are definitely, in my opinion, oversold. Does not mean we can't get more oversold, but we are oversold. You need a further catalyst to get this thing to correct down further. So in my opinion, it's a time to be very careful and not a time to chase shorting after the market has already dropped so much. Many traders, investors who have portfolios right now have seen absolute wipeout, right? This is an example of wiping out multiple years worth of gains. I mean, for you guys in the audience, you got to think about this for a second. We just went back to 2022 highs in a couple weeks, right? We gave back 1,000+ days worth of gains, work that was made in the market to go up. So if you're sitting in your portfolio, yeah, that is psychologically hard. But what you have to look around the room and say, wait a second, this is hard for everybody. The toughest are the only ones that survive in this stuff. This is why trading is hard. This is why investing is hard. Look around and say, self-evaluate. Everybody in the room right now, take a look at yourself and say, how are you holding up? Are you okay? If you're freaking out and panicking, your position sizing is probably too high for your personal tolerance. And I would encourage you to reconsider what you're doing because you might be taking too much risk. You might not be in a sustainable frame of mind. As you also said, Ivan, laughing is a self-defense mechanism, right? You have to kind of say, like, look, if you need this money next month, you shouldn't be trading whatsoever. Absolutely not. You should not be trading. You should not be investing if you need that money tomorrow. If you are in it for the long term, which I personally believe good trading is investing, and investing may not necessarily be trading, but good trading is investing. Because again, you have a longer term horizon. You're not trying to turn that profit next month. You're not trying to ATM machine the market. That is nonsense. You're trying to, over the long term, compound and grow your trading account at a better rate than passive return in the index. That's what you're trying to do. In my opinion, that's what the goal should be for most traders and investors. So with that framework in your head, okay, if you are getting destroyed way too much psychologically in this, you may need to step back and reevaluate what you are doing with your personal trading and investing. I am not, Ivan and I, we're not here giving you financial advice or investment advice. We're just two guys on YouTube that have done this for some reason. Something's wrong with us. We've done this for a long time. We've endured thousands of whip-like experiences to our back from the markets. And that is I don't know what's wrong with us, Ivan. Why are we still doing this?
Because by the end of the day, the pleasure of taking a profit outweighs all the times where you cried.
That's fair. In the long run, as long as you are not making silly, over-leveraged bets that can blow you up, you just have to survive. That's what great trading is, survival, right? You have to survive these flooding moments where it feels like the world's falling down. So again, everybody who's in the audience, take a look at your situation. Are you on the brink of collapse? If so, your size, your risk, your leverage is too high. You need to reconsider what you're doing. If you are, some of you are doing great. I've been getting messages from people who said, Nick, I didn't chase and I've got cash at the ready and I'm taking advantage of dips and I'm trading currency pairs to diversify. And I couldn't be more proud because that's what personally I am doing. And very glad that, I mean, trust me, I'm not bragging because I'm down too. I'm down on this year a good bit. I think probably 7 or 8% in my portfolio. Now the market is down, what, 19, 20 something percent. So I will take that all day long. But again, consider what you're doing. Some people didn't chase the highs. Some people had cash at the ready. Some people are diversifying by looking at other things. Some people are, adding gold to their portfolio. Some people are trading currency pairs. People are doing things. And Ivan, we should be celebrating those types of people who have, taken the slow and steady route and not chased tech stocks off a cliff.
And who said what? Somebody said something. I don't know why everyone is knee jerking. Also, if you look at, for that matter, euro, dollar. Also, if you look at the retail positioning at the moment, where the average short price is 107, about negative 236. For that matter, pound dollar about 160. For that matter, dollar yen about 458. And if that is, I don't know how many positions that is. It's about 628. Also, this, for that matter, 12,000. It's a lot of lots, with 12,000 lots being in on average about 236 pips in loss. And for those who are able to, and I met some lately that is able to, okay, cool, just take it. Okay, fine, that's okay. But we see the emotions in the chat. That is not easy for everyone, and kind of my goal of being here is to make it a bit less hurtful, so that we are able to at least together say, okay, what is currently happening on, is this your dollar? That's pretty end. When euro rose, when I was on the buy here, a lot of shorts comes in, and if they sold 108 and then they went up to almost 112, or 111, that's like 300 pips in loss. What happens to those positions? They're normally wiped out, and now you have a 300 pip loss in your account, and that seems to be happening consistently.
Yeah, I mean, and that's the thing, is there are a lot of people getting wiped out right now and experiencing just the pain of a market volatility spike. A couple people in the audience, Loris says, from January, I'm up 2.4%. Is that good? Loris, that's phenomenal. And again, this is where you need to ignore comments of people saying, oh, you should make 10+% per month on average. This is why that's not so easy, is you have periods where things get really hard. Some people are making a lot of money out there. Like, great for you if you are. And if you're up 2.4% from January, Loris, that's phenomenal. You're doing great. You're doing really, really well. Where passive index people are down 20%, right? So you're doing great. Max says, I'm honestly down 11%, so I feel okay. I mean, yeah, that's the way to think about it. You have to think, if you are down 5, 10, even 15% this year, you are down less than passive investing, which is, in my opinion, everybody has their own definitions of what proper trading is. My definition of proper trading is if you can outperform the S&P 500 over the long term, you're doing great. You're doing absolutely great. So to everybody in the audience, you need to, this is also, it's a weird, I'm not a therapist or anything, but your mental health is really important in these times too. Like you really need to, on a serious note, level with yourself. If something you're doing is breaking you or causing you to have crazy feelings, it's short term. This is not forever. Money is just money. Relax. It's going to be okay. I'm floating 1.3% between a -1 +2, I suppose. Oh, yeah. I mean, Lincoln, that's amazing. If you don't press the self-destruct button, you're doing better than 95%. Very true. Most traders are going to give out in this time. And I'm sad to say that and see that. In 2020, I question my role here in terms of content, Ivan, because I got so many emails, like so many people who are like, Nick, I blew my inheritance. I made terrible mistakes. It was really sad, So Ivan, I'm sure you've gotten those messages too. Like those are hard to read.
I wish it came to me. I haven't seen them around actually, to be honest with you. But yeah, that's kind of why I'm here. And if you're watching my screen, Nick, I don't know if this is the bottom. I don't know. But Europe just came out and said they are ready to discuss 0 tariffs.
Oh, that's
right. They're not doing tit for tat as they were previously saying they were doing. So
Tesla just ripped. That's why I noticed my portfolio is actually green today now, which is I'm gonna just shut my mouth and not say that out loud, because as soon as I said that, market god is gonna say, "Oh, you're green. Your account is what? Your account is green?
What?"
Oh, that's crazy. Look at Tesla. Tesla's positive on the day. Wait, Ivan, so what do we just have? We had just some announcement EU stuff?
Yeah, it's a bit lower, but it's about the third red one, I think, down there. But yeah.
Mutually acceptable solution, trade chief. Despite EU efforts, we have not seen engagement which would lead to mutually acceptable. We are not in tit for tat for dollar retaliation. That's good piece right there. But we're considering all instruments on the table. We're ready to discuss 0 for 0 tariffs, not only for cars, that's why Tesla ripped, but also for other industrial products. Up 2.3%. My account is ripping today, Ivan. I gotta brag for a second. Anyways,
didn't that say bottom?
Ivan, I'm gonna hang a picture of you on my wall tonight just because of this. It's crazy. Yeah, Ivan, maybe last week was the fake out. Maybe this is the bottom. But that is good news. We'll take that on a Monday morning where things were down 5% and now Nasdaq's almost flat. Holy crap, Ivan! This is the highest volatility I've seen in years. Crazy.
Yeah. No.
Create the Ivan indicator. We all need the Ivan indicator.
The bottom indicator. That's my. Whenever Ivan sells, you buy, right? So.
No, whenever you show up, we just
yeah. Okay, true.
Market starts to bottom out. I don't know, something about you, man. Maybe it's your smile. The market's just like, you know what? Maybe it's not so bad, and they just hit the buy button. I don't know, but that's what we needed, Ivan, in terms of news wise, right? We needed, and it's too early to say. I haven't taken a chance to look at it really close, but that's the type of news that we need. We need resolution topics, points of discussion. Those are major positive catalysts. So we'll see if we get. I mean, if the EU is coming forward, that's a really good stance. I also know the UK was kind of willing to come forth and discuss too, even though they don't have big tariffs on them. There's not a big trade deficit supposedly between US and UK.
But it was only 10% on the UK, so it wouldn't be much of a difference in change. But I know I'm supposed to be kicked out soon, so I can just say I have met people who has lost about $20,000 up to $500,000. Like people who says they are 1% in profit, they would literally do anything to be in that 1% gain rather than losing $500,000. So
yeah.
Yeah.
And I mean, those are painful lessons. And Ivan, we got this message here from Steve in the chat. Says, can't thank you enough for helping change my mindset from actively trading with leverage to focusing more on investing without it. Ivan, we're not always loved for saying these things, these concept of like slow and steady. People actually really don't like that because they hear us and they think we're saying like you can never make trading, you can never get rich with trading. And rather, I'm okay with kind of maybe sounding like a naysayer to some in exchange for messages like this from Steve. People who are like, you know what, embracing slow and steady actually saved. This is an extreme dramatization, but it may be true, saving lives, right? People, unfortunately, you know what, with this stuff. And if we can make a positive difference by telling people to rethink and unlearn what social media tells them about what trading is, we might be doing a good thing. And I feel I could sleep easy at that with that in my mind.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.